Yo, what's good, y'all? So this is how you could have caught 210 points trading the NASDAQ futures today. So let's get right into the chart. So first thing I want to point out here is we are on the weekly chart of the NASDAQ futures. And I want to point out a couple things. Namely, the most important thing I want to point out is our new week opening gap from last week. So last week, the week of April 14th, we had a new week opening gap form here. A new week opening gap is essentially the gap that forms from the close of the previous week and the open price at the following week. So you can see here this opening price from last week on the 14th. That is our new week opening gap. So we're going to go ahead and delineate that as 414 NWOG high. Right, that's our high. And then we also had the low of it here, which is at our opening price. And if you want as well, you should always include your consequent encroachment, which is the midpoint of that gap. So you can go ahead and include that as well. And that's our consequent encroachment of that new week opening gap. So now if we look at our 4-hour chart, we can kind of see how the market looked going into the 10 a.m. hour. We did have our new week opening gaps that I just delineated from last week outlined here. And I also want to point out this liquidity that we had resting here that is important to delineate as well. So I'll go ahead and mark that. We had buy side liquidity from the 15th, Tuesday the 15th. All right, and then we also had some liquidity up here, which you could mark also as well. But going into the 10 a.m. hour, this is the critical liquidity levels to watch. And potentially watching for manipulation into this liquidity and into this new week opening gap high and then lower. So whenever I'm playing the 4-hour chart and the 4-hour levels in any PD arrays, I liked to align that with the 15-minute. That's the proper time frame of execution. So looking at the 15-minute, we see here now that same liquidity level from Tuesday is here. And this is kind of what the market looked like. So at this point, I don't necessarily have a bias in the market. I'm just watching to see what the market is going to do because we're not trading into any 4-hour PD arrays. We're not trading into any, higher time frame PD arrays that I particularly would be interested in trading. So I'm just watching to see. Now, just looking at price action, you can see here at 10 a.m., we do form this down close candle here. This is critical now because if we were to sweep any liquidity levels from this point, because you can see at 10 a.m., what did we do? Well, we made equal highs, right? We came and tapped this liquidity level, right? We did not sweep it. We didn't sweep it. So to me, the draw is still higher. But the fact that we formed a down close candle here tells me that we could potentially sweep this and form a change of state of delivery to the downside, right? And so now that's kind of what you could be watching for when the market does something like this, because it's not a coincidence that that high did not get swept at 10 a.m. So now you see we trade into this 15-minute BISI. Here, the market does go higher, right? And now we come and we sweep this liquidity now. So now we've officially swept this high and traded into our new week opening gap, right? Which was the one that we outlined. So now from here, if I was potentially going to play a short move, I would now need to see a change of state of delivery to the downside. What is a change of state of delivery? Well, the series of up close candles that sweeps a high, we must now close below that opening price of that series of up close candles. So you can see in this scenario, this opening price is now the series of up close candles that swept this buy side liquidity high, right? We even swept the 10 a.m. high as well, right? Because this is a high. So we swept liquidity into our new week opening gap high. And now I would potentially, in order for me to, because there's no long opportunity here now that we've taken this liquidity. So in order to justify any type of short move, I would need to see a change in state of delivery. So you see here is when we get that, right? At 10:45, the market comes down and we close below this opening price, which validates a change in the state of delivery, meaning this could be the beginning of a reversal, right? So now this is a reversal profile. So now from this point, I would be looking for a retest of this opening price and now looking to target some sell side liquidity lower. So you can see here, stop loss could be above this high, right? Because this high should not be protected. Now that we had to change the state of delivery, if this is truly going to go lower, this high should not get purged. So that's a 100-point stop loss with a target here, targeting this liquidity for a 2-to-1 risk to reward at these lows from our morning session. So you can see now, if we were to go on a lower time frame to get a better entry price, you can see that the market does at 11 a.m. We come and retest that. Want to try to get a better price here. We come and retest that here. All right, so I could enter here with my contracts, stop loss above here, targeting our sell side liquidity here, right, from these lows. All this is liquidity that I could take partials at as well. Right, so 2-to-1 risk to reward. And now it's a matter of just watching this trade play out. And as always, if I wanted to add to my position, I would need to see an entry mechanism on the lower time frame from this point forward. Because remember, on the 15-minute, now I'm essentially watching. I don't want this high to get purged. That's all I'm really watching on the 15. So you can see here, the market does come and we come and retest. Remember, this change in state of delivery is that opening price from 10.15. All right, so the market comes down below it. We come and retest it one more time, as well as this 1 minute SIBI, right? And so now from here, there's our retest and the market from there sells off and we get smooth delivery right into these lows here where, like I said, you could take a partial there and then boom, we get a huge sell off there, right into these lows. And then ultimately we do end up selling off into our target down here. Boom, which you could now close this trade here for a great 250 point trade or 210 point trade on the NASDAQ. So that was a great trade opportunity today. And as you can see, the market did continue to go lower from here. All right, we traded into this 15-minute SIBI. And then there was another opportunity to sell off into this liquidity here. So great trading opportunities today. Just had to be patient and wait for the manipulation and a change in state of delivery. But every single day, that's the move that I'm watching, right? In this case, get high, a low, higher high, higher low, higher high, right? And then we get that change in state of delivery is when we close below here, right? A retest of that here, and then a sell off here, right? That's essentially the same model that I'm watching on every time frame, right? Change in state of delivery here. We got this purge of liquidity here. Boom. That formula is literally all I look for. It's literally all I ever am looking for. So as long as I see that, then that's all I'm looking to trade, right? Whether that's on the 15-minute or the 1 minute, preferably I like to take it on the 15. And align my execution on the 1 minute to potentially add anything there. But these trades take longer to play out on the 15, of course, so you have to be much more patient. So that's all I got for y'all in this one. I will see y'all in the next one.